Welcome to Taking Stock. I'm Amanda Lang. Coming up in the show, with prices high and recession risk up, how are consumers feeling these days? Plus, is the pandemic over? Did we miss a memo? We'll explore. And a perfect storm for restaurants with high prices and labor shortages. We're checking in. That's all ahead. First, though, for the week that was in business, it's time now for the briefs. Relief that it wasn't worse is the read on inflation in Canada this week, falling to 7% in August. According to the latest data from StatsCan, it is below expectations thanks to lower gas prices in the month. Still, it's high enough for discomfort and continues hot in places felt by consumers the most, including groceries, which gained 10.8%. At these levels, you can expect interest rates to continue higher and for affordability to remain a political topic as Parliament got back to work after a summer hiatus. And in a sign that high prices are taking a toll, retail sales in Canada fell sharply in July. The 2.5% decline is the first drop since 2021. And while some of that decline was thanks to lower prices for gasoline, even on a volume basis, sales fell down 7% for gas alone. StatsCan delivered a flash estimate of sales in August, which showed a modest uptick, offering some comfort to those worried that July's figure will spell recession. But then again, the flash estimate is based on half the usual sample size and is likely to be revised. Labor shortages are a key problem for manufacturers in Canada, and this week, the group that represents them asked the government to take urgent action to help. The CME wants skilled worker shortages to be made a priority. It said a survey of its members shows it's a top concern, with 42% reporting delays or lost work as a result. Financial insecurity is on the rise. A survey of working Canadians from the National Payroll Institute found the number of Canadians living paycheck to paycheck is up 26% from the end of last year. It reverses a positive trend in pandemic that saw many workers saving money, and more Canadians are now feeling financially stressed, a situation that could worsen as interest rates rise. While countries the world over raise rates to fight inflation, as the U.S. Federal Reserve did again this week, the World Bank has a different worry, that this coordinated effort will trigger a global recession. The nature of such a recession could be severe in developing countries, and the World Bank worries inflation could still stay high at 5% globally because its causes, including supply chain disruptions and climate change, won't be addressed through higher rates. Pandemic rules for travel may be coming to an end in Canada, with reports the feds may lift border requirements, including proof of vaccine and mandatory testing for unvaccinated travelers. The ArriveCan app for travelers will remain in use, but reportedly on a voluntary basis. The changes are expected to take effect as of September 30th. And those are your business briefs. Well, if Canadians were spending less in July, it is perhaps no surprise we were also feeling less confidence. That's according to the data from the Conference Board of Canada. Worries about high inflation in the near term had many of us worried. But if there's good news, it's that there's some evidence most people see inflation staying relatively tame over the longer term. Sohaib Shahid is the Director of Economic Innovation at the Conference Board of Canada. Great to have you with us.
My pleasure.
So you had captured this data already. Maybe you weren't surprised to see sales falling in July. When you look at where the confidence levels are and that kind of outer picture of inflation by consumers, does it give you some comfort that maybe we believe the central banks that inflation will be corralled here?
Well, let me start by saying, Amanda, that weak consumer confidence is one of the symptoms of high inflation, and weak retail sales is one of the symptoms of weak confidence. So these things are linked. At the Conference Board of Canada, we produce an index of consumer confidence. Our index for this month shows that consumer confidence is roughly at the same level it was back in the fall of 2020. And that is almost 40% below pre-pandemic levels. So that's really weak confidence. But the consumer is faced with some good news and some bad news. The good news is that energy prices are coming down, commodity prices are coming down, and inflation expectations are coming down. The bad news, however, is that interest rates are still going up, and which means that Canadians have to pay more in interest costs for a lot of the borrowing they've done during the pandemic. They have to pay more in terms of mortgages, and they also have to pay more for if they have to go out and buy a big ticket item, for example, a car. So if I were to compare the bad news and the good news, I would say that in the next few months, the consumer will remain fairly cautious which means that we can expect weak job growth and weak demand in the coming months.
We know some of this can be self-fulfilling, Sohaib. We also know that the central bank wants us to slow down our spending. It's the whole point of rising interest rates, right, is to cool things down just a little bit, but not too much. They also want us to believe that on the other side of this, the sun shines again. Do you think, based on what you're seeing, that they're walking that line, or they're leading us along that line?
Well, the Bank of Canada and other central banks as well, they're caught between a rock and a hard place. On the one hand, they have to use interest rates to bring inflation down. On the other hand, the average Canadian household is a lot more leveraged than, say, the average American household. So when interest rates go up here, Canadian households are more sensitive to it than, say, our neighbors south of the border. Having said that, the Bank of Canada's attempts to bring down inflation expectations seem to be working, because we collect data on inflation expectations, and our data show us that roughly 65% of businesses expect inflation to be at 5% or above 6 months from now, whereas almost 40% of consumers expect inflation to be at 5% or above 3 years from now. Now, those are big numbers, but they are smaller than last month, which means that Bank of Canada's intended impact of raising rates is taking place.
It's so good to have you, Sohaib. Appreciate your time.
My pleasure.
Sohaib Shahid is Director of Economic Innovation at the Conference Board of Canada. Coming up, as more COVID restrictions lift, we are asking, did we learn the right lessons to do better next time? Plus, census data shows some revealing things about the way we live.